And thank you, Hatem. That's great. And welcome, everyone. If you just bear with me a moment, I'll just continue on now. Right, financial resilience. Sorry about that. We're still all getting used to Zoom and everything else. And I think, Hatem, as you said there, it's we do get a little bit fed up with talking about COVID-19. In fact, I said a few weeks ago that every time we do a meeting or a webinar, irrespective of the topic, if you don't give the people something about COVID-19, well, it's just not really a webinar, is it? And anyway, so I'm glad that everyone could join us today. And I'm going to talk just very briefly about financial resilience and what we mean by that. Hatem, you said something very interesting in there, and that was sorry, I'll just make this onto full screen. I'm having just a bit of an issue here with this setup. So just let me see if I can sort this out. My apologies for that. Yeah, Hatem, you said about planning, and there's an old saying that people don't plan to fail, but quite often they fail to plan, and I think that's very appropriate given the situation we're in with COVID-19. Definitely, no one expected this to happen. Well, actually, that's not true. A lot of people did expect it to happen. It was more a question of when it would happen and was it really going to be this big? For me, I think that's the big question. Could anyone fully grasp and anticipate the impact of such an event? Now, a lot of people call it crisis. People have, I now think, thank goodness, touch wood, got out of the habit of calling it a black swan, because Alex, you and I know it's actually a grey swan, sorry, a grey rhino. And it's actually also is termed by a lot of people as a series of wicked problems. So anyone familiar with Rittel and Weber and their work, they talk about wicked problems. So basically you go to fix a problem, but you find more problems, or you find that other things come as a result of trying to fix the problem. So it's really like that. It's been a matter of try it, see if that works, and if it doesn't, let's try something different. I think there's been a lot of criticism of governments, administrators, of the WHO and other people in all of this, but it's been a very difficult one. I think the proliferation of social media and of ready availability to information and the ability to disseminate it very quickly out there hasn't helped, because there's a lot of truths and untruths and half-truths and a lot of conspiracies as well. But in terms of COVID-19 itself and what it's done for business, I think we need to look at what initially happened when the lockdown started to take hold. Well, we look at things like even the upside industries weren't immune from some sort of, let's say, fits and sputters or some false starts with it. I think Microsoft Teams, Google, Zoom, several of those did experience some very initial teething problems. But one thing that really stood out, they could respond to those fairly quickly. They had quite a high degree of agility and adaptability in their business, which meant they could pretty quickly overcome those peak demands, those spikes in demand that weren't normal, and get into a business as usual mode of upping the service levels and ensuring that services were available so that they could really milk the opportunity of people working remotely, working from home, and working in a whole new way and needing their services. So the upside industries did experience some problems, but a lot of those did have some level of contingency planning and business continuity planning and business continuity management in place. When we talk about other risks, I mean, even if you're a tech firm, for example, or a food delivery service, or someone who's really taking advantage of what's been happening with COVID-19, there's still aspects of resilience that you need to consider. And some of the big ones, they're not technical. It's not all about IT. It's about things like liquidity and capital. As Hatem mentioned, the squeeze on cash flow. Your customers say we can't afford to pay you now, or we want to extend our terms. And likewise, a lot of you in business out there are probably doing the same to your suppliers and business partners in the supply chain. So again, it's one of these situations where you've got to really look at every aspect. Successful resilience really comes from a combination of getting the operational aspects right, getting the financial aspects right, getting people aligned, and just really being prepared. And definitely there's one thing for certain, and the research that we've conducted recently has highlighted this, that there's definitely a much stronger need for risk management planning and business continuity planning and management. A question that I'm sometimes asked by people is, well, wasn't this sort of thing legislated? Let's look at the global financial crisis. And in a moment, on the next slide, I'll actually touch on the reason why I mentioned the crisis of 10 or 11 years ago as being quite relevant to this. After the global financial crisis, there was a lot of legislation put in place around liquidity and leverage ratios and the way that financial institutions need to act and the levels of capital they need to hold, and of course liquidity surrounding that. Prudential regulations were tightened quite considerably. And actually not only for banks, but also for large corporates and listed companies, there were provisions put in a number of jurisdictions, the UK is one, where you need to look at reporting your business as a going concern and reporting on liquidity and doing some form of stress testing of the business. And of course, for financial institutions, there were much more stringent, more detailed checks and balances and tests, so reverse stress testing, and the implementation of IFRS 9, which is impairments, and looking at the transition matrices of counterparty credit to see when the debts are getting worse. So when your bad debts are getting even worse, and when they're likely to become non-performing and take a hit on your balance sheet. So the reason I mentioned the global financial crisis is because as I mentioned, the research that we conducted recently, we actually posed some questions to organisations, and we asked them, what did you see, and actually this was the energy sector, what did you see as the biggest challenges and risks to your business, given the global financial crisis, given an oil price of $20 to $30 a barrel, given the 2006, I think it was, oil price downturn, given COVID-19, and a few other things, and MERS and SARS. The overwhelming response was COVID-19 was the single biggest one, followed equally by a $20 to $30 per barrel oil price, and the global financial crisis. So really COVID-19 is really overtaking a lot of other historic events, at least of the last couple of decades, in terms of its importance and its impact. Now, some of this research showed something very interesting. A number of organisations had actually been taking steps and had actually considered planning around pandemics. It was very interesting to note, though, that out of organisations, even though some 80-odd% said, yes, we're aware of pandemics and we've considered it, 1 in 5 who actually had considered pandemics proceeded to do absolutely nothing about planning for them. So I think that's very telling. And I think there is an element of a pandemic or a natural disaster is something that, well, it could happen, but it's not going to happen to us. So our research has shown a definite lack of preparedness. The other point I touched on before was the case for risk management and business continuity management. The case for it is much stronger now. And in fact, 94% of organisations have said what we're experiencing with COVID-19 strengthens the case for risk management or for investing even more in risk management. What I'm going to do now is just a bit of a graph, and it's one that I've presented before, and I think Hatem's seen it, and Alex has used it as well. We've discussed it quite a bit at various times. What are we going to see coming out of COVID-19? Well, we're going to see asset write-downs for sure. There's going to be some fire sales, there's going to be consolidations and probably even joint ventures. So organisations out there who have true resilience, the ones who are cashed up, who have managed themselves well financially, are in a prime position to make acquisitions, to consolidate their operations, to go into joint ventures. They'll gobble up some assets at knockdown prices. Some of them will actually use it as a great opportunity to execute on their strategy. So they've been forward-looking, looking at risk management, saying, what's the next big thing? Where do we need to be? Wouldn't it be great to make an acquisition? They'll find a competitor, or not quite a competitor, but a great enabler with a killer app that's probably struggling a bit. They'll come in, gobble it up, integrate it, and really go on and consolidate their business and their growth and make a real success because they've had good, strong financial resilience underpinning the business. And remember, that's, yeah, cash and finance is one thing, but it's also about people and process and capability as well. That's very important. And we'll come on to that in just a moment. But no one is really certain how it will end up. It's still really up in the air, and certainty is the only uncertainty. And I would highlight the recent events of the last week, especially the BLM protests around the world. Hatem spoke about things starting to revert back to normal. We're also mindful of second waves, but we could see an acceleration in those second waves. We could see a lot of other ripple effects. So initially, when we sort of looked at, how things could come out, look at a pre-COVID-19 situation with GDP sitting up around here, and there and, taking a dip, and initially people said, look, it's just going to come down, it's going to bounce back up. That was one scenario. But we look at scenarios now, people said it's going to be a bit of a U-shaped one, and that U, it could actually even be a bit flatter there. We don't know. People were saying, well, it could be this sort of double dip, or it could go along there, it could ripple along, it could actually be either of these scenarios. Actually, this one with an extended U, or this one, it could be a depression, a global recession or depression greater than that of 1929. We're still not sure what the new normal will be because there is still so much uncertainty out there. Now, another point to make is some countries are already experiencing economic challenges before COVID-19, so that's going to add to the complication and the rates of recovery, and it certainly makes doing business much, much harder, which underpins the need to look at putting a greater focus on your operational and financial resilience capabilities. And the IRM recent research bore out that 92% of organisations will actually be doing that as a result of COVID-19. So there's an old saying that I really like to refer back to, and it's credited to Mark Twain, but we're not certain whether he really did say it or not, and that is that history doesn't repeat itself, but it often rhymes. And, the choices you make today, they really set the scene and the theme for the future, and we need to look at what the situation we're in now, look at thinking forward and really doing a lot of forward-looking scenario planning, a lot of horizon scanning to try and understand what might happen, and really apply some intelligence around our decision making and the path that we take going forward. A few key themes here when we talk about financial resilience. I like to talk about capacity, and I've already said it's about financial, it's about people and process. If you're an R&D centric organisation, it's about R&D, whether that's in healthcare, whether it's in technology, whether it's in some other field, but R&D is awfully important to help underpin that. Speculate to accumulate, make strong investments that are going to give you a great return in the future. And I said before about agility and adaptability. Let's look at organisations, a tale of two different organisations. Let's look at Apple. We always talk about the billions that they have in a cash pile sitting there. They can swoop on other businesses, they can invest in more R&D, and they can even become a more excellent organisation as they move forward. Moving manufacturing from China to diversify supply chain, in theory, from a financial and people perspective, isn't too much of a challenge for an organisation like that has the cash reserves and the footprint globally and great people supporting it. But let's look at some of the industries that have been really harshly hit by COVID-19 are airlines. And I use the example of Virgin Australia, who have got about 6 or 7 million Aussie dollars of debt, and they've had that for a few years now and had no real clear diversification strategy or any real clear idea of how they were going to get around that big debt pile and get on and grow that business. And what happened? COVID-19 has come along and it's really floored them. They're now up for sale. They've basically gone broke, and they're looking to be bought up by someone else or perhaps even merged into another airline. So that's an ongoing saga. That's just a classic example of where you don't have the right level of capacity and resilience embedded in the organisation, piling up debt, not having innovation, managing risks, and having some business continuity planning. You're going to be sunk with something like COVID-19. Commitment to investment, and as I said, R&D, and commitment to strategy is extremely important. And also your stakeholders. You might think stakeholders is a very strange thing, but as Hatem said, and as I mentioned earlier, we talk about the whole money chain, and we talk about what happens when the going gets tough. And we need to actually ask maybe for extended terms, or we need to actually get into co-opetition or cooperation or joint ventures with others. If we manage our stakeholders well, not just our customers, not just our suppliers, but actually everyone else involved in that, we can really show a commitment and actually boost our capacity for agility and adaptability. And certainty is very important. Being able to achieve sustained performance over time is a great measure of how well you're going, how much certainty that you have around your business model and your ability to execute. Mastering the external dynamics are a key enabler, and it's really reflected in the outcomes, having the ability to compete and win. And there's a few common success dimensions here, and I also mentioned governance and reputation. Leadership, communication, that they're all very important. Culture is absolutely critical. If you're moving towards strong, sound risk management, being resilient, forward-looking, you need the right culture and the right leadership in that. But governance and reputation are very important in developing strength. Because with a great reputation, people will stick by you in the hard times. They'll have confidence and trust in your business plan, your ability to execute, and they'll have confidence in your organisation as a going concern. And so just finally, we're going to move on to talking a little bit more about scenarios. And Alex, I know, is going to give you a great presentation on that. And Hatem is also going to touch back on the things that we can do around scenario planning and running different analytics and looking at all the advisory that goes around that to make it happen. So coming up with the right ideas, the right scenarios, running them, and actually coming up with some outcomes. So the tool that you're going to see, it's going to give you some outcomes. It's not going to be a panacea to solve problems, but it's going to say, hey, given this scenario, or this scenario, or this one, given certain other factors, this is what the outcome is looking like. So around that, you then are able to establish the uncertainties and risks and actually start to plan on how you're going to execute around certain strategies given certain scenarios. I've just put this up because it's very interesting when we talk about financial resilience. We look here about cash flow and liquidity. So we look at any organisation, and it could be over weeks or months or quarters, but you look, you'll have cash coming in and you'll have cash going out. And really, it doesn't matter if sometimes you've got a little bit of cash going out here and there, that's fine. If your cumulative liquidity position and cumulative cash flow is up here above the zero line and actually above these peaks here, you're pretty much okay. What happens when you come to the zero line here? This is your survival horizon. This is a survival period. Once you cross this line, you're in negative cash territory. And that's where things really start to get very tricky and very difficult to manage. So what I'm going to do now is I'm going to hand you over to back to Hatem